Well, let's look ahead to the figures and at the prospect of Europe's economy with Azad Zangana. He's from Schroder Investment Management, and he joins us here in the studio. Good morning to you.
Good morning.
Thanks for joining us. So, is there an acceptable level of inflation here in the UK that's still going to encourage growth?
Well, I don't think there's necessarily a limit on inflation as long as it's seen to be a short-term rise in inflation, as we saw in January. As your colleague said, the large cause of the big pickup in January was the VAT being reinstated at 17.5%. Now, we expect that to trend down over the rest of the year. Now, as long as we see that inflation rate trending down, inflation expectations should remain well anchored.
So you think it's under control? You don't think this 2% inflation target is perhaps out of date?
No, I certainly wouldn't say it's out of date. I think you can pick any inflation target, and as long as you stick to that target, then you can add credibility to that.
Now, do we know yet what the full impact of the QE program that we've seen in the UK is going to be on the economy? Not yet,
but we have seen a pickup in both real growth and nominal growth. Nominal growth now back to 1.1% on a quarter-on-quarter basis, or 4.5% on an annualized basis, which is pretty much what the Bank of England is targeting. But where we have seen the impact is through asset prices and through some kind of resumption in lending by banks, but not fully on real growth.
Now, do you think that 200 billion of QE that we've already had is going to be enough?
Well, the way the Bank of England decided how much QE to do was by looking at the amount of nominal GDP that the economy has lost. Now, they measured that to be roughly £200 billion worth, and because nominal GDP is now rising again, as far as they're concerned, that should be the end of quantitative easing.
Now, when do you expect interest rate levels to climb back up again in the UK? I mean, when will we see them at pre-crisis levels? How long is that going to take?
Oh, I think it'll take some time before they return to pre-crisis levels. I mean, we're looking for the first rate rise in the third quarter of this year.
Okay.
Fourth quarter of this year
okay.
now. We think that because inflation is going to be trending down for the rest of this year, the Bank of England will have plenty of room to keep interest rates on hold for some time, allowing for fiscal policy to be tightened to help fund the budget deficit.
And what's your outlook on growth for the UK economy?
Well, we're expecting about 1.1% growth in 2010 and 2.5% in 2011, and that's quite a sluggish recovery compared to sort of official estimates.
How about this budget that we're going to get from Alistair Darling tomorrow, then? What are you expecting there?
Well, the workman-like budget is coming up, and I'm not really expecting any major surprises on tax and spending. However, we should see a cut in the borrowing forecast.
Who's got better policies with regard to controlling the deficit, the Conservatives or Labour, in your opinion?
To be honest, I don't think we've seen enough from either party to explain how they're going to control the deficit. I mean, so far, the Conservative Party are looking for faster and tighter cuts sooner. And personally, I think it's a little bit too early to start talking about raising taxes and cutting spending in 2010. 2011 seems more like a sensible option, but neither party are going to outline any major changes until after the general election.
Right. Well, let's turn to Europe then. I mean, what is your outlook on Europe? We've been talking today about how the ECB could trail the US as far as when it raises rates, because it has these problems with the pig countries.
That's right. Yes, and we pushed back our ECB rate rise forecast to January now, 2011. I think the ECB will now have to be more mindful of conditions in countries like Spain, Portugal, Greece and Ireland, and it simply cannot just focus its attentions on Germany and France and where growth is developing there. It is going to need to pay more attention to some of the smaller countries who are really struggling at the moment.
And what does it need to do? I mean, it's sort of cracking down on governments, telling them that they need to crack down on spending and get their budgets under control, but of course that has an impact on growth. Absolutely, and it's a shame that they didn't do this, over the last 10 years. They are going to have to crack down, but on the other hand, they need to keep monetary policy nice and accommodative for those countries. What do you think of the EU's handling of the Greece situation? There's a lot of political sort of table tennis being played out in public. Countries are positioning themselves, not necessarily in relation to the Greece
sort of crisis, but in other areas. And unfortunately, countries are calling each other's bluffs at the moment, and it's escalating to a situation whereby we're either going to get a bailout or the IMF are going to step in.
So you think Greece is going to need some sort of bailout?
Well, Greece doesn't seem to be willing to pay the current rates of interest that they're being forced to pay. At the same time, Germany seems to think that it's a perfectly acceptable rate for them to be paying. So,
right. Azad Zangana, European economist at Schroder Investment Management, thanks so much for joining us this morning.